Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, July 22nd. Stock market posted a solid gain on Tuesday after a late-day surge led by the financial sector helped investors shrug off worse than expected earnings reports from major technology and financial firms. A drop in crude prices thanks to the easing of a tropical storm threat also helped bring buyers to the table. Tuesday looked like it was going to be an ugly session as stocks opened 0.9% lower, but investors took the opportunity to buy the dip, encouraged by a drop in crude prices and a turnaround in financial stocks. The stock market ended the session with a gain of 1.4%, with 6 of the 10 economic sectors posting a gain. Smaller cap names played a large role in the broader market strength, especially within the technology sector. The tech-heavy NASDAQ Composite rose 1.1% compared to the 0.1% increase in the large-cap NASDAQ 100. The Russell 2000 spiked 2.8%, benefiting from a 22% surge in airline stocks thanks to a handful of better-than-expected reports and the drop in crude prices. Financials were at the center of the opening losses and the subsequent late-session rally. The sector fell 3.8% at the open after Wachovia reported a larger-than-expected loss of $8.9 billion, and American Express disappointed with its earnings and outlook. Wachovia recovered from a loss of 11.6% after investors were encouraged that the company plans to raise $5 billion in capital using organic measures instead of a dilutive capital raise. Wachovia enjoyed an added boost, settling with a whopping gain of 27% after a Deutsche Bank analyst indicated this may mark the bottom for Wachovia. The financial sector followed suit, surging to a gain of 6.6%, with notable strength in diversified banks. Exchange operators also posted a solid advance after CME Group topped its earnings estimates. The financial sector is now up 31.5% in the last week alone. The industrial sector, up 2.2%, also outperformed. General Electric announced that it is partnering with Mubadala, an Abu Dhabi firm, on initiatives including commercial finance and clean energy research and development. Each company will provide $4 billion in equity over the next 3 years. Strong emerging market demand helped Caterpillar increase earnings per share 40% year over year, topping estimates. UPS, meanwhile, reported in-line earnings, which was a relief to investors. The company did call the economy bleak, but kept its full-year earnings forecast in line with expectations. Overall, earnings results were mostly better than expected, including beats by Biogen Idec, Baker Hughes, DuPont, Lockheed Martin, and United Health. Merck reported better than expected results for its latest quarter, but continued concerns over its cholesterol drug Vytorin sent shares tumbling. Large-cap technology was a pocket of weakness, with Apple and Texas Instruments slipping on their respective earnings and outlooks. Memory chip maker SanDisk fell 24% on its earnings report. The technology sector underperformed with a loss of 0.1%, although that was a substantial improvement from its session low when it was down 2%. The energy sector, down 2.2%, was the biggest laggard for the session, falling in conjunction with crude prices. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.